All right.
Shoot.
So,
Shoot.
so you're going to be talking about this, how to approach
Yeah.
business post COVID-19 and play it smart.
Yep. So we've been chatting through a few different things, right, of late. And I think one of the biggest things at the moment is to kind of think through, we're 3 months kind of since COVID really hit, and what are the things that what we've learned through this time. And so what we want to chat through is really what businesses and people should be thinking about and looking at their internally at their business to see how they come out the other side. So the three things that we've noticed on our side, the first is cost management, right? Managing your costs, understanding what are your fixed costs, variable costs, what you can drop, what you can adjust. The people that have been able to manage this well are probably the ones that are going to come out the other side strongest. And the second thing is around the ability to pivot. So with businesses in the moment, when everything got hit the other day or 3 months ago, if you weren't able to adjust your business model, your revenue model, your cost model, and all of that quickly, you were stuck in a hard place. And so it was one of those things where the ability to pivot and adapt your model quickly was one of those things that will help you come out the other side stronger. And so, and I don't know how you found it, Jake, on your staff, but that cost management and that ability to pivot are probably two of the biggest factors.
Yeah. So, 100%. It's about adapting to the circumstances.
Yeah.
Yep.
So,
agreed. So let's start with what we've learned. So that's basically how we started. So we've broken it up into 4 sections. That's probably a good way to do it. What we've learned from COVID, what we've learned from it. So that's basically what we're talking about, how you need to adapt. We'll go into a bit more detail with that in a second. So what we've learned from COVID-19, why some businesses struggled, why others thrived during the pandemic. I think it's a combination of the industry that they're in and also their business model, right?
Yeah.
So we'll look at that. We'll look at what to focus on post-COVID-19, what we should focus on now, because we're past it. I think we're going towards past it.
Yeah, I think we're getting towards, whether it's closing or not, or ending or not, I think businesses in the economy are looking like they're about to open up again. You can see the cafes and restaurants letting more people in and things like that. So you start to see it all open.
Would we consider it now post-COVID or still?
I don't think we're post-COVID. I think we're getting out of COVID in terms of from a business point of view.
Okay, so then we'll say how to prepare for post-COVID then.
Yeah.
And then the last one will be making smarter decisions to minimize its effect in the future.
Yeah.
Yep. Okay, cool. All right, so let's start with what we've learned from COVID-19.
What we've learned. So kind of as we were briefly... Sorry, you go.
The first thing you spoke about was cost management.
Yep.
Was one thing.
Yeah, so as I kind of alluded to earlier, so the biggest things that we've learned from COVID, in my opinion, is to manage your costs, the ability to pivot and adjust to circumstances, and the third is to adapt your way of working during this, the way of working that we've had over the last couple of months, and how the new business is going to be like that going forward. So, for example, with the ways of working, we talk about Zoom, we talk about Instagram Live, we talk about all these sorts of things where, 3 months ago, 4 months ago, people wouldn't have expected that everybody could work from home and in a responsible fashion and all of that stuff. But now we've seen it's working well. Like, the technology like Microsoft Teams and Zoom and Skype have worked amazingly. And people are, being able to sit at home, whether they're in isolation or not, but they're able to be at home and work and conduct their business the way they used to be.
Exactly.
So it's really, So it's really been both those three things. Sorry,
So you think it's obviously like you said, the ability to pivot and adapt to circumstances, like you said.
Yeah.
Then the ways of working, like you mentioned, everyone working from home now. What's the purpose of an office? Online meetings being digital meetings and not physical. and face-to-face as much anymore. I think we are slowly going back to that, but do you think that it'll probably be forever changed because of it?
I think it will be changed forever, in the sense that you hear about workplaces, restarting, they're going back to the city or going back to their place of work, but they're adjusting their model to be 1 week on, 1 week off. So you have split teams, for example, like some of the banks are doing these split team scenario where they say, team A and team B, and then team A they'll basically halve the team, and then they'll just divide the workforce in that way, which means that there's a less of a risk if anything happens, but they're still in the place of work and still in the office.
Okay, so let's talk about cost management in more detail a little bit. You were speaking about, so cost management would be probably things like relocating staff to homes, new ways of working, having to lay off staff, and things like that.
I think cost management, I guess during this time, people have realized that they need to be more aware of their costs. So the only thing that any business can guarantee is what of their fixed costs going out the door. Nobody can guarantee how much revenue they're going to make. However, we can pretty much guarantee what your costs are going to be. So it's not just necessarily about, cutting your office costs just because of COVID, you can work from home, but it's just generally managing your business costs. Like, have you got the right level of labor? Have you got the right office location? Do you need to be in the CBD? Can you be somewhere else? There's general business costs. Are you spending too much on phones? Are you spending too much on travel and entertainment? What are you doing? But it's more around just generally managing your costs. And when something like a pandemic hit, people were hit pretty hard. And when they had a high level of fixed costs, they weren't able to adjust that as quickly, which meant that they felt the pain a lot harder.
Yeah. And also, I think some businesses didn't really cut costs. They changed their methods of costs, and they allocated them into different areas like more digital-based, system-based, online-based systems and equipment and things like that.
Yeah. No, so I think that's exactly right. And then in terms of even your expenditure, right? And we'll talk about this a little bit later, but even with the way you want to spend your money on advertising or on marketing, people during COVID were, slowing down how much they wanted to spend. However, during COVID, everyone shifted to being on their phones or on the computers 24/7. So when you look at your digital marketing presence, you'd actually argue that it makes more sense to double down and actually invest more in digital marketing, increasing your digital presence, because there's actually more people online 24/7 just watching and knowing what's going on. We all, on some degree, knew and hoped that the economy would pick up, right? And pick up quickly. And so we're all kind of hoping that it's, 2 months, 3 months, 4 months before everything gets back to normal. And so if you've got that mindset that things will get back to normal, it's how do you kind of stay profitable and stay, awareness, and increase your awareness for your business during this time, so that post-COVID you can actually excel.
I agree. I think that the difference between a successful business and one that is probably going to continue to go down is one who doesn't accept the changes in the circumstances.
Yeah, I agree.
And they cut off costs, but they refuse to spend on areas where they need to accept that that's probably the norm for now, and that's where they have to go to get to increase their revenue and whatever it is that they want in their target.
Yeah, no, I agree.
Yeah, so cool. All right, so businesses that have struggled and businesses that have thrived during the pandemic. So we know that the ones that have been hit the hardest are retail, hospitality, recreation and personal service, like fitness centers and gyms and athletic centers, mining, finance, and property service. Other things would be that have thrived. There are businesses that have thrived as well through COVID-19, not just ones that have, struggled. The ones that have thrived are the wholesale trade. Rising activity in the supermarkets that went off the roof.
The charts.
Equipment to facilitate working from home engagement, like you said, Teams, Microsoft apps, heaps of apps were killing it. So I've got clients who have started an online shop on their website through COVID. So then that would have cost to get web development systems in place, online systems. That would have increased heaps. Also, what else?
There's been some agriculture, telecommunications. A lot of the data providers have done really well during this time. Telco providers have done really well just during this time. And there was some even like home gym equipment, home in-home entertainment style companies. They've done really well. Like, you know, games, board games, gaming consoles, like PlayStation and Xbox. They've done really well. They're pretty much sold out, right? So you've got a lot of that sort of stuff going on as well.
Yeah. So you've got clients that you speak to during this period as well that you've been consulting and stuff like that.
Yeah.
Do you find that were there in a lot of how did that go in terms of the situation?
A lot of people obviously during this time were a little bit nervous, and so that's generally been the conversation around, well, how do we manage this process? How do we get out the other side? I think there was a couple of things that we would talk about, which were, how do you manage your business during this time to stay profitable, to stay afloat? Because we were kind of saying that we believe that we're going to come out of this, but how do you survive this so that in 3 months you can excel? And then on top of that, it's about getting your house in order. And so what can you prep yourself? So how do you prep yourself in terms of what do you want to do in the future? So therefore, how do you get your finances ready? How do you get your staffing ready? How do you get your marketing plan ready? How do you get your overarching business in a position so that as soon as things lift from the economy point of view, you're ready to go? The biggest error that when we were talking to a few people, the biggest error that I was saying to guys was, if you wait for things to turn around before prepping yourself, then you're going to be 1 or 2 months behind. So you have to be positive. If you truly believe in your product or service, you have to be positive and then know that you're coming out the other end. But in order to do that, prep yourself.
Okay, yeah, fair enough. You got to prep yourself. That's very true. So is that what you were doing? Were you, like, I find that a lot of businesses were turning towards their brokers, especially now, because they needed financial advice, especially with everything that was going on. How did you find that? Because you obviously, through APS advisory.
So, you're right. Like, so during this time, there's been a lot of conversations around refinance. So people were refinancing their homes to draw some equity out of it and to manage their cash flow. As we're approaching end of financial year, there are a lot of people talking about, can we buy some cars? What can we do in terms of get some assets? There's an increased asset write-off, so up to 150K. So where you talk about some of those businesses or industries where they haven't felt the pinch as hard, a lot of them were saying, you know what, let's kind of get our equipment now, as instant asset write-off. There were great deals because some of the retailers were, doing some great deals. So they're pushing down that path. But there's been a lot of conversation around some short-term working capital loans, business loans, and refinances, because that's been a core focus for people at the moment.
Okay. And do you think, it seems like it hasn't been a massive hit at this point in time? Like, at this point, do you think that we will get to a point where it's going to be a recession or something like that? Because we're getting all these benefits and everything from the government and all these, loans and things like that. But, and then freeze, like they gave us the ability to freeze for 6 months and rent and loans and things like that. And then we get grants. But then what do you think?
Yeah, I think...
What do you think is going to happen in October, for example?
Yeah, I think something that people really need to be careful about is the 6-month loan hold, this repayment pauses, because what the banks are doing, they're capitalizing the interest. So you're not getting all you're doing is not paying the loan now, but you'll have to pay all the interest that they're accruing during this time. You owe it to the bank in 6 months. So you're just delaying that payment. You're not actually removing that payment. So it's more for cash flow rather than a reduction in your payments. But what my bigger concern is more when the grants stop. So when the government pull back the JobKeeper, JobSeeker, and all these additional grants that they're offering, what will happen then? Because at the moment, that is topping up to people's incomes. and so they're keeping on essentially spending their money. But what's going to happen later, that's the bigger thing. So hopefully, if the economy, if it's like a balancing act, right? So if the economy picks up kind of September, the grants slow down September, October, it may offset each other and we're okay. And if that's the case, it's a great scenario. However, if the grants were to stop, but the economy's not really at that point, then we're going to see a sudden drop in income because, you know, some people are getting an extra $3 to $6 grand a month, depending on what grants they're eligible for, right? So that if that drops off in a family, and if one person's lost their job or something like that, then that has an impact. So we'll only see that post. Because at the moment, there's childcare being paid for. There's all these other stuff that's happening in terms of supporting Australian families, which is amazing. But when that stops, if the economy hasn't caught up to that position, and if trade and business haven't caught up, then we're stuck in a little bit of a position.
Okay, cool. All right. So we've seen the industries, and I mentioned the industries that have struggled. Do you think that they can get everything's going to go back to normal, like physical retail, or do you think that because it was sort of struggling even before COVID, we had issues with physical retail and businesses like on streets and things just before COVID as well? I think that this has pushed people to probably order more online products online and things like that rather than in store. And do you think that it'll go back to how it was, or do you think that it'll?
I think the business should pick up, right? Like in terms of will it go back 100% the way it was? I don't think so, because I think we've learned a lot during this time. Like I think I was talking to a client that runs a food retail business at the moment. It's a franchise business, and what he was saying was he was all about dining customers. They were doing really well, and they were growing at a ridiculous rate. And then COVID hit, and then something, you know, obviously things started hurting. It's from a P&L point of view. However, straight after, they straight away went into online deliveries and, you know, home meals and things like that. And that started picking up. So it may not be the old form of revenue model. They may not make their money from the same way as before, but they've had to adapt. And I think the businesses, you may stay in retail, or you may stay in food, or you may stay in financial services, or you may stay in marketing, but the way you conducted your business before will be different now. And I think we've learned a lot during this time. And I think that's the difference.
Yeah, 100%. So I've got a restaurant client who now work through Uber Eats for delivery. They never had that before. I've got another client, like I told you, they used to sell their products only in store. Now they've got it online, and it's going really well, and they haven't even promoted it much. Like it's just automatically doing well. Even like you said, during the period on COVID, I always told my clients, now's not the time where you can back down on digital marketing or just digital exposure, because there was a lot more engagement online than there used to be when we were looking at the reports in the months of COVID than there were before.
And that's the interesting point. Yeah, exactly right. And I think it's hard for people to really comprehend that, because income's dropping and there's a feeling that you shouldn't be spending it on marketing, or you shouldn't be spending it on certain things. However, you've got to have a long-term view. You've got to play the long game. You're not in it for a 2-month play. You're in it for, you know, your career or your business. And so if you can play that long game and you can absorb it, which kind of comes back to one of those points we were talking about in terms of cost management and working capital. So where a lot of businesses were struggling was when they were running their business month to month, when, like, you know, they were just making a little bit of profit, but from a cash flow point of view, it was just month to month. When people had, you know, a bit more of a buffer or working capital loan, or they had a loan facility in their business which allowed them to grow and spend, that meant that when this hit, they weren't feeling the pinch as hard. So it's just because they were prepared, exactly. And once you're prepared financially in that way, when you're prepared to capitalize on opportunities. So, for example, like as you know, Jacob, we own a cafe. So me and a friend own a cafe, and there was one of our customers at the shop owns a gym, and he had to shut his gym down immediately, obviously due to COVID. And in his gym, he had purchased a whole bunch of food, like protein powders and things like that, that he was selling his clients. And he came to us and said, "I've got all this protein powder. I don't know what to do with it." So we just said, he goes, "Can you buy it off me, or can you take it off me?" And I said, we actually just bought it off him at his cost, because he's a customer of our shop. We just said, you know what, just sell it to whatever you buy, paid for it. We'll just buy it off you, because we're going to use it, because we're running a takeaway anyway during COVID. So it wasn't a big deal. But there were people that were offering him, 30 cents in the dollar of what he paid for it, because what was he going to do with it? He wasn't able to use it anyway. So he was contemplating what to do. We just said, doesn't matter, we'll just pay for your cost price, because we need it. In the end, we actually found out his cost price was lower than our cost price. But that aside, like we pay for it his cost price, which was fine for us.
Yeah, yeah.
So it's one of those things.
Yeah. What were you saying? It's one of those things.
Yeah, it's just one of those things where if you were cashed up and ready to go from a working capital point of view, you're in a position to capitalize on opportunity that present, not to gouge someone else or take advantage of someone else. But if retailers are offloading stock and they're saying, you know what, all this stock is usually $1,000, I can get it for $500 because we just need to offload it. Great, you can buy it.
Okay. Yeah, that's good. But also, I'm pretty lucky as well, because I never had any fixed what's the term? Costs. That's it. Like in terms of staff, it was there. It's all casual contract workers.
Yeah.
In terms of rent and things like that, I was okay with that. And I find that even people, if they were prepared and they still have equity, they still struggled in terms of that, because they couldn't get out of like the rent
leases and things like that.
Yeah, and
that's a good point. Like even for your business, when we've talked about your business and your fact that your costs are quite variable in that sense, right? The introduction of the shared economy with WeWork and Whatso and all these shared offices, when some of these guys, you can get month-to-month agreements, and so
even shared offices are struggling. I remember
even
we
shared
were
offices,
about that.
Yeah. So the shared offices are struggling, but as a tenant of the shared office, you could either take a lease, a long-term lease, or you're able to take month to month.
Yeah, well, there are a lot of offices now that offer month to month.
Yeah. So even because of that.
Not just the office, like desk spaces.
Desk spaces. Yeah, sorry. Yeah, the desk space. Yeah, sorry, the desk space places. So, which means that you as your business can kind of run in that particular way, and have an address and have a desk to access, but you're not committed to 2 years and 5 years and 10 years on a lease, which is very different to the way business we used to be, right?
That's true. That's so true. Nothing's as fixed anymore. And
nothing. Yeah.
Actually, I got a quote here which is really cool. Let me see. It's got to do with what you were saying in terms of journey to agility. Leaders are rapidly turning their attention to the next, a period of unpredictable and possibly muted economic recovery with new competitive threats and opportunities. Quite possibly the next decade is going to be never normal, it's called, because a new era defined by fast changing shifts in cultural norms. So there's no like, that's it. There's nothing fixed. That's in terms of values, behavior, not just in terms of work and business. Increased demand for responsible business practices and renewed brand purpose. It's just going to be a lot more fluid. That's just society in general now.
And I think that's right, though. So, and I think that leads on to what we wanted to chat about next, is just kind of touch on, which is what to focus on post-COVID.
What to focus on now.
Yeah, and I think we need to actually stop and look at what we sell, look at what we do, and see what is going to actually be needed by businesses and by consumers in the future. And I think that is the biggest factor. So, we mentioned it before, the way people work and the way people live is going to be different. The ability to work from home is just going to be accepted at a much higher level than it was before. People talked about it, but it really wasn't accepted in its full form. The way, what do people need? Like, what do people enjoy? They're enjoying the experiences. They're enjoying being at home. they're enjoying this flexible work where your work may cross over 7 days, but it's a different world. They're, you know, the fixed versus variable cost environment. Like, what are the needs? What are the products? What are the services that people need? Like businesses, like, you know, you've gone from a world of, if you look at it in a finance role, for example, you've gone from needing a CFO or a finance person working your business full time. For a small to medium business, do you need the person full time, or are you happy for a 1 day a week person to come in and just, you know, advise you in that form? Like, what is the new way of working in that capacity, right? So
yeah, and I find that businesses that are coming now, that are like, for example, myself, even we don't even need fixed contracts or anything. We're working. It's so fluid now that we've got a computer, and that's all we need for a business. Yeah. And there's no physical need for a place, location, fixed location, fixed staff, and everything like that. I feel
exactly
like it's a lot more undefined.
Yeah, the whole thing's undefined now. Yeah. And COVID probably pushed that, I reckon. And I think it did. And I think it probably accelerated and it pushed it. In terms of our level of acceptance. Agreed.
We were going in that direction.
Yeah, completely agree.
Yeah.
And I think one of the things is it'll be interesting to see, for example, what happens post with things like, and if you use the gym as an example, right? So with people during COVID purchasing equipment for home and walking on the street now, what is that going to mean for some of these guys? Like, what is going to happen? So are people just going to go back to their old way and routine? And a portion of the population will go back to the way things were. Or they'll just go back to the routine, go back to the gym, go back to, you know, they go back to the gym and run the treadmill rather than run in the park.
Yeah, 100%. I went yesterday.
There you go. So there will be a natural bent to do that. But then there'll be other people that will say, well, hold on a minute, do I really need to pay $70 a week to go and run the treadmill when I've run in the park for the last 3 months? So
that's true.
You'll get a difference in opinion, and what's right and what's wrong, it doesn't really matter. It's each to their own. But businesses will have to adapt to that. So now gyms will need to adapt to that. How? I don't know at the moment, right? What they will do, like, it'll depend on their client base.
That's true.
They're going to have to be a bit more flexible. They're going to, offer different services.
But I find that gyms in general, there are a lot of options in terms of fitness. It's outdoor training. It's always been around anyway. Yeah, exactly. There's always the traditional gym model. There's like other gyms, the CrossFit gyms that don't have the equipment and things like that. So I think that we're all right with that. I don't think that's going to change a lot.
No, I agree.
In terms of that, for example. Okay, so how can you make smarter decisions for your business to minimize this effect in the future? I think that you already sort of spoke about that. You mentioned being prepared, the ability to pivot and adapt to circumstances, being prepared. Another thing is this is when a broker comes into play as well. A lot of people turn to financial advice in these times as well. People are probably turning to a lot of brokers now. They're brokers and financial advisors at this time, especially now, and they want support to so they can know what could be a period of accelerated business growth after this storm. So have people started coming to you now, asking you, okay, what now?
Yeah. So when COVID hit, there was a lot of conversations around refinance, for example, and that was the big focus. It's how do we refinance our home loans, get some cash, lower our interest rate, things like that. Where the conversation is going now is prepping for growth. So it's what access do we have to business loans? How do we restructure and adjust our business to grow? So on the broking side, we have been speaking to some people around funding, but mainly funding for growth. But on the business consulting side, it's been more around process improvement and business management. So it's more around, okay, have we got the right team? Have we got the right process? Have we got the right structure, both from a company structure and a business operating model in order to grow? So that's been our focus. And now you can see that through the conversation that we've been having, it's more that. And then on the broking side, it's how do we fund that? So we have been looking at people's, asset position in their business and saying, well, do you, like, what dollars, like which I guess, what sort of assets do you need to use your own money for? And what sort of assets do you want to use the bank's money for? And so we've been working through with clients as to what that needs to look like. And then also looking at their operating model, their business processes and their structure to say, well, okay, now that we're prepping for the next phase, how do we prepare ourselves? And what do we want? What are the things we need to do to put in place? So that's kind of been that focus.
Yeah. And how are banks going with lending money? I think it's getting a bit harder now, right?
Yeah, the banks are really tight. It's quite tough to get loans at the moment. They're really watching the earning stream. They're worried about people that are heavily on grants and things like that, heavily dependent on grants, because once that stops, who knows? However, there are some lenders. Some of the lenders are pulling back, but there are some lenders that are really willing to talk, because they know what's going on. They know business is going to come back. They know that if you've had a stable business model for a long time, they're opening their doors to having that conversation. So it's more of a storytelling. You've got to actually take the bank on that journey with you. And so when you start to show, there has been a drop in income, but we've set up a new stable position, which is not dependent on government grants. It's actually based on our client business. It's our customers. They're coming back now. Then you can go in. At the end of the day, if your business was in a position where you weren't generating any money and you weren't in a position that you can see when you are going to start generating money, you're not going to really want to go to the bank and borrow a lot of money anyway. But what you do want to do is say, well, what can I do? So when I'm ready, what can I do? So having the conversation, when we have a conversation and say, well, when we get back to a normal position, we should be able to borrow 200,000 or 300,000 or 400,000 for your business in order to grow. Then you're prepared, what you need to do to get to a position where we can submit an application. And I think that's the difference.
Yeah. Do you find that people are a bit more serious now? It's filtered at the fluffy people who have business ideas who want to lend money, but they don't know, they're not exactly prepared for it. So I find that in the real estate industry, for example, there are people who are still buying, but they're the serious people. They've got the got the deposit and they're all set already, and they don't have issues or no like loopholes or anything.
Exactly right. You hit the nail on the head. Like if you went to an open house before, like pre-COVID, you'd have 1,000 people walking through the door, but 3 interested buyers. Here, you've only got those 3 interested buyers. So the difference is anyone that's there that's coming in is seriously looking, so they are a buyer. So, and the same thing for us. Like if people come and talk to us, they want to do something. There's very few tire kickers, for lack of a better phrase. There's less tire kickers in the market at the moment. However, that being said, on the back of COVID, and because people are trying to get out of certain things due to financial situations, there are people searching for a bargain. So you'll have people that need to do something, need to buy something, and then there's people that are just opportunistically looking in the market to say, well, this asset is worth 100 grand. I'll offer them 25 grand. If they take it, great. If they don't, doesn't matter. So you've also got that in play, but that'll always happen on the back of any sort of downturn.
Yeah, exactly. So that's exactly what you're saying. So I think people are being a bit more cautious. They're looking at their balance sheet. They're looking at their profit and loss management.
Profit and loss, yep.
Yep, and then they're asking themselves, do we have the right finance in place? They're being a bit more strategic. Do you find that you're helping people in your consulting with that at this point?
Yeah, and I think that's exactly what we're focusing on. Within the small to medium business that we talk to, it's more around, okay, getting that balance sheet and P&L right, getting that your business operating model right, and working with you on that, and then prepping for the future. So that doesn't mean that right now we're going to go for a loan or we're going to go buy a business. It's okay, what do we need to do? How many months do we need to spend to prep to get there? But how do we work on that path? Take the path, go with that business on that journey.
So you're helping clients who have got ideas, but they haven't even had the strategies set in stone yet.
Yeah, so we're talking to a few people where it's just concepts, and so it's a little bit harder. Whereas concept, what we're doing with them is, here's a concept, work on it, plan this out, work on your business plan, work on your marketing plan, make your idea a bit more tangible. But then at that point, we'll start to obviously get to a stage where you can generate income. But in the early stage, it's more just nurturing and guiding that person on their business journey.
Very good. All right. Okay, we've passed 30 minutes.
I think we've passed 30 minutes, yeah.
Is there anything else you wanted to mention?
Probably, I guess the only other thing that would be worth mentioning is one of the things that we've learned during this time is around just share your experiences and just have conversations with other people that run businesses and other people going through the similar sort of experience, even if it's in a different industry or a different product. It's just communicating with different people is just communicating with other business owners and other consumers is really good, because you just learn from other people's experiences and you can adapt that and turn that into your industry and your business. But it's interesting to note other people are going through the same thing that you're going through, just from a different perspective. So that is probably one of the biggest learnings that we've had during this time.
Okay, cool. All right. Okay, great. Yeah. Okay.
That's awesome. Thank you. Thanks, Jacob. Thanks everyone for joining.
Thank you. That was our first one. That was all right.
First trial run. It was good to see. Good to see people joined. Thanks everyone for coming. Hopefully it was informative and hopefully you enjoyed it.
All right. Well, let's see.
Awesome.
We need to save this so we don't get rid of it. I don't know how to
do
it out.
I think I can save it on mine. Anyway, thanks a lot, guys. Appreciate it. Yeah, I think so.
Yeah. Cool.
Cheers. Bye.